Hey guys, super happy to be here once again. And today we have James Bentley. James, it's a pleasure to have you here on our show, The Trade Pod. Now, before we'll dive deep into your interesting story and everything, I would love to introduce you to the audience. But before I will introduce you and make a proper introduction, I would love if you can tell a little bit about yourself, so we can actually dive deep into the conversation.
Sure, yeah, how you doing, mate? Thank you so much for inviting me on. So yeah, my name is James
This is our
Bentley.
pleasure, mate. This is our pleasure.
Good stuff. So I've been in the FX market since 2009. So I actually left school and went straight into the City of London. Managed to get a role as a junior trader on one of the world's largest trading intermediaries that used to facilitate trades for some of the world's largest banks, traders, hedge funds, and institutions. So I went straight into the jungle at a young age, which was amazing. I mean, some of the lessons that you learn on trading floors where there's 650 traders, you just couldn't never pay for. So I've been around quite a while. Originally started in equities. You spend time on fixed income desks, credit desks. You kind of bounce around the different desks until you find, till you qualify as such, and then you find your feet. And eventually, that was for me trading European debt. So I spent time on the European debt desk for a good couple of years. I was actually there for just under 5 years in total, and I like to call that my apprenticeship. You don't earn millions of pounds as a junior trader until you start forward dealing. And it was only the back end of my time at the bank I was actually accessing capital. My team of six had a risk portion that you trade, and I had part of that risk that I had a target to make the bank money every day, and that was that. After the bank, I moved to a boutique hedge fund. So a couple of the senior guys raised 9 million, sorry, nine figures, and we was trading FX. And that's my first experience after about 4.5 to 5 years working for the bank. That was my first experience of actually being targeted as an individual to generate funds from the FX market. And I really found my feet. One thing that I tell everybody about my time at the hedge fund is that these traders have been trading for 20, 30 years prior to me at that time. And they trade in the most simplistic, basic, boring, not advanced style and strategy. And they make fortunes and great percentage return. So when I see some of these traders at a young age now learning from YouTube and picking up all these bad habits of trading these very complex and overcomplicated strategies and have a million and one indicators on their charts, I just have to tell them, just take a step back. Some of the world's best traders that make the most money for the world's leading banks trade the most simple, basic way. You do not need to overdo it. And it really stands out for me these days that with trading, basics works. So I was there for a little while. In 2008, 2015, I was trading solar, built up one of the largest UK retail funds. And in 2018, I set up the education arm of the business, which is Financial Markets Online. And since then, we've won multiple awards globally for our trader training programs. We're highly regulated across the globe. I mean, here in UAE, where I'm based now, all of our programs are KHDA approved, which is in conjunction with government policy. In the UK, we run off-call regulated trader training programs. So we're pretty much the only company that have regulated education, off-call work in conjunction with the UK government. We have a level 5 advanced diploma, which is equivalent to receiving a UK degree, and a level 7, which is equivalent to receiving a UK master's. So it's not only the accreditations and qualifications that differentiate ourselves from the industry. We have traders that have been doing this for over 30 years. So we're kind of head and shoulders in the education industry, and it's led me to where I am today. If that wasn't a too short or too long of a bio.
Absolutely, absolutely. Since 2009 till today, today, 6th of May 2025, it's been 16 years, and you have passed through a lot. Now, I would like to, over the story that you have told me about yourself, and basically about your background, I would like to ask you about about the simplistic strategies that you spoke about when you were sitting in the trading desk near 650 traders and actually absorbing more and more experience over time, which led you to the level of the understanding that you have today. Now, the thing that really caught my interest is the simplistic strategies that were extremely boring and led them to earn a fortune out of the markets. Now, can
Yeah,
you please expand more about this one?
yeah, definitely. So these guys, I mean, the easiest way I could kind of give you an analogy is these guys nowadays are late 60s and 70s. So they're not super familiar with the high-tech equipment that we have. They don't use, I mean, to give you an example, some of the team barely even use their iPhones. And it's like, if you think about the technology this stage, it's crazy. So they typically stick to trend following strategies and they purely rely on price action. Price action is the only leading factor in everything we do. So price action is the bars that appear. Any other indicator is lagging behind price action. So if you're following price action, you're following trend, you're going with the flow. I like to call it swimming with the tide. It's a lot harder to trade against the trend, which is swimming against the tide. So most of the simplistic styles and strategies that trade when you're trading and analyzing at a retail level or into a low professional level of a private hedge fund that are not moving markets, these guys are speculating based on the market movers. They're typically trend following systems on an hourly time frame, understanding core price action and typically looking for continuations. One benefit those guys have is that they usually have a large enough trading account to carry trades or hedge trades. So huge losses are quite infrequent. When you think about the professional side of the industry, these guys move markets. So they're not speculating on MetaTrader, worrying about when the next level is being hit or where the next crossover is or anything like that. These guys are driving markets for business purpose. So they'll be facilitating trades on the world's largest banks that might be exchanging hands. A great example that's online is if the Mexicans were supposed to, or the Mexicans were buying oil from the Saudis. That there is a tangible trade where a physical product's been switched. And that
Mm-hmm.
would be, and what happens there is that Mexicans translate or transfer Mexican peso into dollars and Saudi oil into dollars, and that's a dollar related trade, therefore moving the price of dollar. A lot of what I see online these days is people say that they have the same strategy Goldman Sachs trades, or I've been stop loss hunted by the banks. All of these things are just ridiculous. The banks don't know who retail traders are, who retail traders are. They don't know who we are, what we do. Retail trading as a whole is not a teardrop in the ocean in comparison to the guys that move markets. So it's yeah, just something that sprung to mind there. I'm sure you've seen it online about I've been stop loss hunted or liquidity's grabbed me. It's not a thing, honestly. It's every 3 or 4 years in this industry, the same style of trading gets repeated and with a new name.
I got it. Which now, it is really interesting to dive deep into this conversation because, out of my background as an entrepreneur, especially among trading desks and traders, I've learned a lot about how they manage and their behavior to the markets,
Mm.
which, it really catches my interest to hear from you. How do you actually absorb knowledge when you sit about among those traders inside the trading desk? Because
Depends what level
it,
you are. As a junior, no one really pays much attention to you. You have to really prove yourself and show persistence and show eagerness. And you have to do things outside of trading to catch people's attentions. These guys
Mhm.
are not the typical characters you see in banks these days. When I was involved, to get a job in a trading floor, it was very much kind of who you knew rather than what you knew. Whereas now, a lot of these banks have graduate programs and graduate schemes with some of the top universities. Back when I started, it was everybody was related somehow. Someone's brother or dad or grandson or uncle or brother's girlfriend's daughter and blah, 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 blah. It was always like a friend of a friend that got you on board. So you knew the characters, you knew the environment, you knew the type of personalities that were there. These days, you have to get a first in university, then you have to go for a scholarship or a summer intern, and then you get cherry picked to work for a bank. So it's very, very different. But in terms of absorbing, if you're money motivated and you're driven in that way, when you hear the type of risk policies and the money that's flying around on a day-to-day basis and the targets that some of these banks have, that would motivate you to want to be in that environment and understanding that a senior dealer or a senior trader that's been at this bank for 20 years and is one of the top guys and you know he's earning tens of millions a year, that's going to prick your ears up to say, I need to get around this guy. And then you'll be invited out for business lunches and you'll go and meet the brokers and so on. And once they like you, they bring you in.
Hmm. I got it. Now, I really want to ask you a slightly different question about trading exotic instrument like European debt. I
Okay.
think that trading such an exotic financial instrument really demands something extra out of your side as a trader. By the way, we have interviewed one of the greatest options traders in Israel, and he's trading exotic instruments like exotic future pairs, future Forex
Mhm.
pairs,
I
like
think,
I don't know, the Swedish krona against the Hungarian franc, and
okay,
so many different and pretty strange and exotic financial
yeah.
instruments, to be honest. And I really felt out of him that that demands something special,
Mm.
that will really recap and the
With
need to trade those financial instruments as a trader. Now, out of your experience, I would like to listen. What would needed out of your side in order to trade it properly?
Yeah, two different things. So trading exotic currencies, depending on where you are. So the Scandinavian assets are quite a big product in a lot of banks. There's a lot of wealth in Scandinavia. Now, if you're trading it from a retail basis, then firstly, if anyone wants to do that, check the spread because it's not a typically frequently traded product. The cost of buying or selling that product can be slightly higher. Swedish krona and Norwegian krona move, they cycle quite well from a higher time frame. So they're quite easier to trade if you have a patient approach. When you're looking at products like fixed income, credit, risk, European debt, they're not products that you typically go to start trading, especially at a retail level. Those products, I like to call them as hedging products. So, to give you an example, if you want to relate that back to the FX world, over here in the UAE, 99% of losing traders are losing on gold. I've seen it day in, day out. There's this weird obsession that everybody has to make money on gold, but they don't. It's too volatile, and a lot of these new trades out here don't understand it. So to tie in and better your understanding of gold, there's two things you need to do, and I'm just trying to relate this to understanding correlated products, which is why you trade fixed income debt and so on. You need to look at 10-year yields. 10-year yields will give you a leading buying pro in terms of where gold's performing, also dollar related as well. So if you're trading gold, you need to tie in an understanding of the weight of the dollar, and you need to understand what the 10-year yields are up to. When you tie those three assets in as a triangle, each one is going to complement another, and they'll be able to give you a trigger point as to when gold's going to move, or vice versa. So what you wouldn't do, you wouldn't go and trade a 10-year chart, treasury chart, as a first point of call, but you use different charts to understand the movement, weight, sentiment, and direction of other correlated pairs. So to give you another example, maybe an easier example is risk on, risk off.
Hmm.
If money's coming out the US stock market, money comes out through fear and typically needs to be put into somewhere safe, and that's where gold or Japanese yen. Japan is a strong economy. That's where they get stronger essentially. So you get safe haven buying through fear and loss through the equity market, and that's like when you're looking at European debt. They're typically hedging products. So if you had a loss on a trade, you'd hedge a product. If you was long on a trade and you could hedge your risk short, you'd balance the book off. So you'd finish one winning, one losing trade, you'd come in at zero. So that's kind of how it works.
I understand. Yeah, basically, it really catches most of the people interest to hear about financial instrument correlation and inverse correlated financial instruments. And to be honest, I would love to hear out of your side is how do you first pick an asset right now after you have finished a long journey and a long variety of different experiences among the trading space inside the trading desks.
Mhm.
I would like to hear from you, how would you pick um, a a financial instrument to trade on? What would you look at, and what are the major factors that will catch your eyes right before you start trading this financial instrument. For example, if you're picking to trade the M&Q or the NQ, or it doesn't really matter which future contract you will trade, I would like to hear from you what are the specifics and the measurements you will directly target yourself on in order to
Yeah.
find the crucial and the most important factors that you need to look at each and every single time you trading the financial instrument.
Yeah, good question. So I trade the European Open, and I typically trade FX and German DAX during that period. What I look for is direction. So to see a currency pair move, let's say I want to buy euro dollar and I want to go long. Euro needs to be stronger than a dollar, something that you learn at a basic level. So I like to understand the weight of a currency. So I need to see that there's euro buyers at present and there's dollar sellers at present. When you're trading two strong currencies, like if euro was strong and dollar was strong, they just butt heads. You don't get any direction. To see direction on a chart, you need one strong, one weak, put them together, and that's that burst of excitement. So the first thing I do every morning is I analyze the open and what markets are strong and what markets are weak. And that's where I find my pairing. So as an example, if euro was strong this morning and Aussie was weak this morning, my go-to trade that morning would be euro Aussie long, because I'm trading one strong, one weak. And then I look for momentum. If momentum's bubbling, I typically move to a smaller time frame. And I have a few key things in place. I use pivots for take profits. I use an R2, S2 on a 5 or 15-minute time frame. I look for a moving average crossover to happen previously to confirm the weight and sentiment in my favor of direction. And then I look for price action. Price action leads me into the market. So I'm a technical based trader. I trade pure price action. But to find me a top asset to trade this morning or today or right now, the most important thing for me is trading a strong versus a weak currency. And that allows me to find the burst of excitement. It's going to stop me trading in a dormant market or a market that's going to go sideways or having to hold a trade. So I typically look for around a 20, 25 point risk, and I'll let the market run until I catch that full burst. I'm on Dubai time at the minute, so I trade anywhere between sort of 11 a.m. till 1 p.m. and that's me done for the day. In the UK, it was very similar. I used to pull the trigger at 7 a.m. GMT time, and I'd be out the markets by 9:30. That's when I used to make my way into the office. So I'm just looking for, I have no bias. I don't have a favorite currency pair. I couldn't tell you the last 5 pairs that I've took because I have no emotional attachment to a currency pair. I just want to know what's moving right now. If it's moving, how early am I into this current phase? And is there some reward for me to move into? So everything I do is currency strength or weakness based.
If you don't have any bias and if you do not if you trade such a small, mate, you're trading for 2 hours and a half. This is
Yeah.
your average trading duration per day. Now
So
I would like to
that's
understand.
time at the screen. That's time at the screen. Sometimes you can be in and out
Yeah,
of a
time
trade
is
for a
screen.
lot less. Yeah.
Well, first of all, I love it, but I would like to hear from you. How do you stay consistent? How do you measure this consistency over a long period of time?
Well, it's you first of all, you build that time period in with your daily routine. So that allows you to know that they're your trading hours and you'll be there. Some days that the market's flat and boring, like Monday this week, I didn't take a position at all. There was nothing really giving me any insight that there was true momentum there. This morning we had some of the yen pairs shift a little bit and we had pound long as well. So pound long was the main mover this morning. Pound was strong across the board. As soon as I find that strong and weak currency, I'll put them together and find my pair. So the bias kind of thing comes from, I don't care who's strong and who's weak. I need to know where the money is. And that comes down to when being in a professional environment, you have the ability to understand flow and you can see where the drivers are in the market and where the sellers are in the market at a professional level. And if a certain entity or bank had a huge number of contracts short at a certain price, you'd guarantee a market short there. And that quick, fast-paced, moving style of trading has always stuck with me. So I don't typically trade the higher time frames due to not being patient enough. But the smaller time frames, when I get some momentum there, that's where I'll jump straight into.
Mhm. I understand. Now, out of your role right now, educating trading students,
Mm.
let's define it by this way. I would like to ask you about how was your shift from a trader to an educator? Because most of the people do it, but most of them, like an integral part of them, do it poorly, to be honest.
Mm. Yeah, so
And it doesn't really matter if they were great traders or not, but they not align with
yeah,
with the educator characteristic. How
yeah,
have
good,
you
good,
done it?
good question. And first and foremost, my passion lies in trading. So before educating, I'm a trader. The first thing I do every day is trade before educating. That will always be my bread and butter. And I think a lot of people that are now educators or YouTubers these days, they've never had professional trading experience. Where I spent the first 5 years of my career in a trading environment. Back then, there was no Instagram, there was no social media. It was you're a trader and you keep it to yourself. You don't tell anyone you're a trader, which I found it quite hard. I've only, so I know we're going off topic a little bit, but I've only just transitioned to the social media stage a few years ago, a couple of years ago. The circle of people that we have access to, the guys that work, that contract for me now and trade for me and so on, which I'll touch base on in a minute. These guys are late 50s, 60s. I mean, our oldest on the team has just turned 67. He's got over 30 years tier one banking trading experience. So if you try to tell him to get on social media, he throws the phone out the window. Get away from me. I don't want to be on social media. But this guy is one of the top traders I know. I mean, he was a contractor for the Bank of England for a very, very long time and trading for some of the world's largest banks, spent time in Chicago and trading for the National Bank of America. This guy, when you put someone like him next to a 17-year-old guy on Instagram that pretends he's been trading for 10 years. There's just no comparison at all. So that's kind of why we set the education business up, because I had access to traders that have traded at a professional level for decades. And they were there to tell the stories and to share experiences and to spend time with new traders and be open and honest, because unfortunately in this industry, most people lose. Most retail traders lose. And it's a fact. And I hate saying it because it's the industry that I'm in, but that comes down to greed and get rich quicks and all these marketing campaigns that you see on Instagram and people renting Lamborghinis and saying, hey, look, I just got this through one trade on gold. In reality, they spent $500 renting it for the day. And it misleads a lot of people and they believe they can do this when they can't do this. So because I've got guys that have done this at a professional level and traded hundreds of millions for the banks, they are the first people to tell you this is not easy. This is a difficult industry. If you do not risk manage, you'll blow yourself up. If you do not stick to the rules, you hold yourself accountable for losses. And I think because we've been so transparent and we have such a diverse team, in my UK London office, I have 36 traders and over 200 contracted traders that trade our capital. So
Oh my God.
we have the facility to fund traders right up to $2 million on a 50-50 profit share. And these are not just prop accounts that you can pay for. You have to be hand selected to, once you finish our education, be hand selected to pursue this program and have the ability to become a full-time trader, because you've got access to capital that can pay a reasonable amount of income on a monthly basis. So when we designed the program and pulled in the dream team or the A team of people that I have, and we pulled in our industry contacts to be the first people that has qualified regulated education. Nobody has regulated education. We have it. We have the ability to back traders up to $2 million dollars per head on a 50-50 profit share. We have links to get people jobs in London. So if someone passes our diploma program, we can get them an internship on trading floors so they can actually get a career in the city. So everything we do has a purpose. It's not just education to put people in a signals group and make $200 per each sale. There's an end goal for anybody that wants to create and generate a career from this.
I understand. No, you're completely right. And to be honest, I can really understand the point of view that you're standing from. Now, I would like to ask you more questions about yourself being a trader back then. Um, Now you have started trading right after the crash of '08.
Mm.
I think it's a pretty intense period to start trading. Now, developing a characteristic, especially nowadays, it's definitely easier than it was back then, and your journey as a developer as a developing trader is constantly, and you really need to invest 100% effort within it. And I really want to ask you how it is to build a trading characteristic back then when you had like no exposure even to
Yeah,
the professional
you.
trading.
The thing is that you're around people that have no emotions to trading. Nowadays, because social media is so huge, you have people telling you about the psychological aspects of trading. Back then, there was none of that, and the characters that are traders are old school, old school guys. Like these guys had no emotions, and I think that becomes from the style of traders. If I go back to the banking industry, from a trading at professional level, when retail traders now trade, they have a 360 role. So they have to analyze, plan their trade, build scenarios, take the trade, manage the risk in the trade, and close the trade, and then journal. So a one-man band like me or you now, we have to do everything by ourselves. But when you're trading at a professional level, you don't. Someone researches, someone analyzes, someone executes, someone carries risk. And sometimes you've even got execution guys that close trades. So at a professional level, you're just doing one job. So your job might be just to enter the trade, as an example. So you don't care how it finishes because that's not your job. Your job's to take the trade. And then you only took that trade because someone passed you the research. So there's different people in different teams that do different parts of the job. Whereas that means you're emotionless. But where me and you trade now, we have our own money and we have to do everything all by ourselves. So our emotions are involved because it's our capital.
Mhm. James, what do you think about nowadays situation with the entire space of prop trading of those
Um,
prop firm companies that
I have
really
very
make you eligible enough to trade. Like if speaking about like your absence back then and a trader absence nowadays, it's like a completely different world. And nowadays you can really get funded extremely fast. And by the way, be eligible enough to get payouts. It's a
I have
completely
very I have very mixed opinions on
what do
these.
you think about it? By the way, you're in the UAE, the capital of all prop firms, if I'm not mistaken.
Oh, really? I didn't know that.
Most of the liquidity providers, I think, from a recent research, are
Yeah, but
sitting.
liquidity providers are different to prop
Yeah, but
firms.
you cannot have a sustainable prop firm without having a liquidity provider to pay for successful traders because like the
Uh,
business is
Let me tell you how it really works. It doesn't work
all
like that.
right.
99% of prop firms, some of them don't even have an LP, a liquidity provider. What they do is they run up an API pricing feed. So they get a platform, let's say they use MetaTrader, or let's say they use MatchTrader or CTrade, whatever they use, whatever platform. And they get a fixed API that gives them the pricing, so the feeds. And then because they bank on 99.9% of traders losing, because most traders that buy prop accounts have never traded $100,000 of their own money. So they tend to over risk, huge lot sizes, and they want to see this as a get rich quick scheme. So playing the game of probabilities, prop firms never send trades live to an actual live market. They let people play on demo accounts on a live server. Now, what happens is, let's say 100 people buy challenges today. How many of those do you think are going to actually invoice profit after 2 phases?
One, two.
Okay. So if 99, or let's call it 98 people paid $500 for a challenge, out of that money they've just taken, they can afford to pay the 2 people that invoiced, right? And then the cycle keeps going.
This is a genius business model. This is an absolutely genius business model.
It is, but in my eyes, and bearing in mind, I've got friends that own the largest prop firms, and very, very rarely when they find a talented trader, they'll put them through to market execution, so an A side. But it's a very small number of people that actually do that. Now, there's hedge funds now that are getting in, that are using capital to diverse risk. And those guys will be finding good traders. But to get on one of their prop fundings, just like we do, we don't give it to everybody and everybody because we need people making money. So it has to be a selection process for traders that are making money to then get them on an A side. But as I say, most prop firms now, they don't even use a real liquidity provider or send trades direct to market. They're just waiting and banking on most people losing.
By the way, speaking about prop firms, I do know a prop firm company that really enables you to leverage your own deposit. Their name is Zintra, and they allow trading mainly U.S. equity, U.S. equities. You cannot trade Forex, you cannot trade futures, but they enable you to have a down payment of $1,000 and basically get a leverage up to 1 to 10, meaning that you can trade your own deposit up to $10,000 basically, which really helps as a trader. So a big shout out to them. And I can tell that they're a large company that can afford you to join them and to leverage your own capital and to reinvest within your business and to grow with them. I will tell more about this company later on. Um, and yeah, I can really understand where you stand and
Just to
what is the overview?
go back
Yeah.
onto, I didn't actually answer your question. So my opinion on prop firms is split. If you're a consistent trader, so you know how to make money, and you know the prop firm's going to pay you out, what a great idea. What a great idea. If you know they're going to pay you and you're going to be the 1% of people that invoice that company, do it.
If you
What
have
my
money, it's much more easier to make money. You know,
Yeah,
there's the famous code that money sticks to money.
yeah. But literally. But what my problem is traders that don't know how to make money, thinking it's an easy ride to spend a couple of $100 and make a load of money real quickly, because they just fall into the category of 90% of traders lose.
Mhm.
So if you know how to
Absolutely,
make
I
money,
agree with
do
you.
it.
It's a great idea. It's
Or
an
just
absolute.
go and get education, because when you get education and you get assigned a mentor, you hold your mentor accountable for your success. So if
Have
your
you had a
mentor,
mentor?
sorry,
Have you had a mentor?
yeah, of course, of
Which
course.
one?
An early, well, I was working with senior traders at the time, so I was the junior on the desk. So you have a variety of mentors. I've never brought a mentor online or YouTube
You
because
have
I was,
multiple, but you have multiple mentors. Nowadays, I don't think about someone who can really afford himself a mentor. You know,
hmm,
trading education is really expensive.
it depends, doesn't it? But also, it's not expensive if you learn a skill that you can use for the rest of your life to make money from, and you find consistency within that. The problem where you might feel it's expensive is
Yes.
these guys on YouTube that are just selling the same crap. They put their own spin on it. But if you have proper, thorough education and practical experience, that's another thing I'll say as well, is that people shouldn't buy education unless there's a practical element alongside someone. So we run live trading events across the UK and UAE where once someone's on our program and done the theory part, they come and spend the day with us and trade live all day. So you're putting theory to practice. And in an environment of live trading, you're going to get immediate feedback. And that feedback is vital for trading success.
Absolutely. How impactful this experience for those traders are.
It's amazing. It's life changing for some people, but also for us as well. It's so rewarding, especially when somebody that perhaps isn't at the demographic they'd like to be in terms of financial status. And then 2, 3 years down the line, you bump into them or you see them in the mall, and you can just see their life's completely turned around. They're spending more time with their family, their kids, more holidays, more enjoying life, big smile on their face. It's life changing for everybody. But only the people that get to that stage are the ones that take this very, very seriously and treat
Mhm.
trading like a career.
And how would you identify a great trader?
Anyone can trade, but you've got to be decisive. You've got to make decisions. You can't procrastinate, because if you're in the environment of an under pressure, or you're under pressure and the market's shifting and you've got to make a quick decision to close a trade or take a trade, being decisive is a key attribute to being a trader. You have to have the ability to learn and the want to achieve, which is really important. You can't have none of this like, oh, I can't do it and I'm not good enough to be a trader. No, you don't need a maths degree, which a lot of people think you do. You have to be serious to want to change your life and put the time and effort in. You have to be decisive to make quick decisions. And you have to be committed, and you understand this is a journey to get to an elite level of a trader. It's one of the highest paid jobs there is. And if you think of other higher paid jobs, like, I don't know, a doctor trains for 4 to 6 years to become a doctor, to get to a high level of salary. You think about, I don't know, footballers play football from they're 3, 4 years old, and they earn the wage. I mean, uh, there's a few that earn at 18, 19, but most people hit big contracts at 25 years old. So you're talking a huge time of being an apprenticeship, or an apprentice, I like to call it, before you hit jackpot. So it annoys me when people think they can learn trading. Oh yeah, tomorrow I'll go and earn 1 million. No, you have to treat this as a career, an apprenticeship, and get it right. And if you can give yourself a couple of years, which is, I would say, 18 months to 2 years to get to an elite level is doable if you have the right guidance. You have to be patient and
Mhm.
committed to give yourself that time.
Absolutely. Absolutely. And there is a big misunderstanding among after a long period of time, I think what you have just said turns out to be cliche because it's so right and people tend to ignore it so many times.
Mm.
Which bombers,
Yeah, yeah,
uh, bombers and bombers. But to be honest with you, I really agree with you and the standpoint that you're speaking of after so many years of experience. And to be honest, I'm really grateful for the opportunity that you came here onto our show and spoke about your experience, spoke about your point of view over the existing market. Not just the financial market, but the market of traders
mm.
and how everything comes to perfect congruence. So I would love to thank you.
Thank you. Thank you as well.
I enjoyed that conversation. Most of the time I make conversations about how it does, and we do not dive deep as we dive deep into the things within this conversation. So thank you.
Yeah, yeah.
It was a great pleasure.
You have to come to Dubai, and we'll do a longer one in the office on the trading
All
floor.
right. Warning, this is recorded. If I'll come to you after 2 or 3 weeks, I'll tell you, yeah, I'm gonna be landing in Dubai in like 2 months.
Yeah, yeah, do it,
But
man,
this
do
is recorded. Now I got to prove, man.
it.
I will.
Yeah,
I
you're
will show
welcome.
up in your office one day. This is a
Good
promise.
stuff.
This is recorded as well, by the
Nice,
way.
good stuff.
So,
Good stuff.
James, thank you for your participation. I really appreciate it, and thank you for your time and all the insightful lessons that you shared with us today.
No worries. Thank you. Take care. Yeah, see you
Thank you,
soon.
mate. Thank you. Bye bye.